Welcome back everyone to the Audacious Money Witch channel, where we talk about the magic behind the stock market. What's up, Audacious gang? It is so good to see you. Are you totally bugging out about the stock market? It's so intense, right? I think the top has in and we are about to correct. But you know what? We're not gonna totally lose our cool. Today, I'm going to show you how to read a 10K like a total professional. It's like the secret map to finding the next totally rad stock. And for this, we're going to look at the 2024 annual report for Dutch Bros. Yeah, people are saying this stock is way too expensive, but I'm you're not seeing the whole picture. Starbucks has a market cap of over $100 billion and Dutch Bros is only around $10 billion. So duh, that's an easy 10x opportunity if they keep growing. I'm telling you, this could be the Palantir of coffee, so let's get into it. Part 1, the business. First things first, when you open a 10K, you gotta read the business section. This tells you what the company is all about. Dutch Bros is a high-growth operator of drive-through shops, serving totally delicious, handcrafted beverages with parallel speed and superior service. They're the fastest-growing beverage brand in the entire U.S. They have over 1,000 shops and they're expanding from the West Coast to the East Coast, for sure. So what's their secret? It's all about the vibe, the people. They empower their baristas to make every customer interaction remarkable. You get a super friendly person walking right up to your car window with your drink. It's a total game changer. Tim Hortons doesn't do that. Starbucks, as if. Oh, and get this, their menu is totally customized. You want it sugar-free, dairy-free, caffeine-free, you can get it. They even have this cool Rebel energy drink that's a huge part of their business, about 25% of their sales. So it's not just a coffee shop, it's a total energy powerhouse. And speaking of fast, about 90% of their business is through the drive-through. They don't even have a seating area, so it's all about speed. When it gets busy, they have these super rad runner barista girls come out with tablets and take your order right in the line. It's those old school diners on rollerblades, but not on wheels. It's a total competitive advantage, for sure. Part 2, the people. It's all about the vibe. Now let's talk about the people. At the end of 2024, Dutch Bros and their franchisee partner have approximately 26,000 employees. 71% of their employees are female, 47% of their employees are white, 29% are Hispanic. The 10K says they really invest in their employees. They have a ton of training and career advancement programs. It's not a dead-end job, you know. They want to promote people from within. The goal is to have 100% internal promotion for their regional operators. That is so cool. They have 400 people ready to be promoted who've been with them for an average of 7 years. That's a huge sign that they're doing something right. And the management, the CEO, Christine Bairong, is a total powerhouse. She used to be at Starbucks, and she's a Harvard grad. I mean, applied mathematics and MBA. Duh. She's a world-class executive. It's a huge plus. Part 3, the gnarly risks and the big bucks. Okay, now for the gnarly stuff. The 10K has a whole section on risk factors. It's super important. You have to compare it year after year. First, they're super concentrated in the western US, about 70% of their shops. So if there's a wildfire or something, it could totally mess up their business, and gas prices, for sure. Then there's the cost of stuff. The price of sugar and cocoa went up a ton in 2024. And guess what? The company says they don't want to raise prices on us because they're worried about losing customers. So their margins could get totally crushed. And like the union thing, the 10K says none of their employees are in a union yet, but it's a risk. If it happens, it could totally disrupt things and hurt their profits. Now let's get to the fun part, how much the execs get paid. This part is in the proxy statement, not the 10K, so you have to, totally go find that, but it's worth it. The CEO, Christine, makes a base salary of $750,000 a year, and she gets a bonus. If the company hits its revenue target, she gets $1.5 million, and she also got $1.8 million in RSUs. That's major money, and she's got totally rad $900,000 signing bonus. But the co-founder Travis, he gets a base salary of $1.5 million, and you know how he literally controls the company with his majority shares. It's like a total power trip. The 10K even says his interests might not align with ours, for sure. And this is the kicker. The CEO to employee pay ratio, the median employee is like a part-time barista making about $19,437 per year in California. The CEO's total pay was $4.9 million. That's a ratio of 256 to 1. What? Part 4, the wild corporate stuff. This is where it gets a little wild. The company's corporate structure is called an Up-C structure. It's like a total mind trip. Dutch Bros Incorporation is the public company, but it doesn't run the shops. It totally owns a stake in the private company, Dutch Bros OpCo, which actually runs the business. The founders own units in that private company. The problem is, the 10K says there's a dilution risk. Their agreements say that the founders can exchange one of their private units for one share of public stock. But if the public stock is worth more because the company is holding extra cash, they could totally benefit unfairly. It's a dilution problem, for sure. But Palantir had a similar thing with stock-based compensation, and their revenue growth was so gnarly, it didn't even matter. And remember how I said Travis has all the power? The 10K says he has almost 75% of the total voting power. Our Class A shares only get one vote. So Dutch Bros is a controlled company. He can totally make all the major decisions without our input. It's a total buzzkill. And get this, I was reading the footnotes, the fine print. It says they sold an airplane and a hangar to the co-founder in 2024. This company owns a plane. Psych. They also have a ton of long-term debt, about $219 million. And if interest rates go up, it's going to cost them a bunch of money. Conclusion. So after reading the 10K, what do you think? We know Dutch Bros has a totally rad business with a competitive advantage. It's got a world-class CEO and a huge growth strategy. But we also know the risks are totally real: inflation, location concentration, and a corporate structure that gives the co-founder a ton of control. You've got to totally weigh the pros and the cons. Are you willing to deal with the gnarly stuff for a chance at 10x? Let me know what you think in the comments below. Are you bugging out, or are you ready to invest? Don't forget to and subscribe for more totally fun financial content. Au revoir, everyone.